Hey everyone, my name's Andy. My channel's Finding Value, and I wanted to do a video that some comments on Twitter that I'm reading. I want to read you the comments, and I'm going to tell you that it's full of maybe a little bit of garbage because your viewpoint's not necessarily right here. I'm going to explain why. So this is what the comment is. It says, exactly, guys like John and Andy are up hundreds of percents. Well, to get it right, we're up thousands of percents on some of it, all right? No, I'm just kidding. Easy to hang on. I have some that I bought, I'm down. This I will hold. Any other investment will be for swing trade. Only way latecomers will make money, in my opinion. Here's my opinion, all right? I don't think you're necessarily right in terms of it's easy to hang on because someone's up hundreds of percents or thousands of percents. I think it's actually harder to hang on, especially depending on how experienced you are as an investor. And I'm going to give you an example. and this is my example. And I'm going to give you one example at the moment. I am up to, actually, I don't even really know. Let's find out, guys. Let's find out. I'm going to do a quick calculation here, and I'm going to give you an example. And this has nothing to do with bragging or any of that stuff, that nature, all right? So I think SM Energy, I don't even know what it's at, SM stock. Let's just find out real quick. It's at 36.64. So 36.64 divided by $1.50, I am up 24 times my money. 24.42x. Now here's my thing, all right? And I'm just going to throw out a number, okay? 24.4 times, let's say you put in $10,000. That's now $244,000. That's what a $10,000 position would be if you're up as much as I am. How many people do you know could hold and still be holding a 24.44x position? How many of you would have sold at 1, 2, 3 times your money? How many would have put it into a free ride? How many would have been chased out on a sell-off? You think that's any easier to hold on to that? If you only have $10,000 of investment and you have a $244,000 position, you think that's going to be easier to hold on to? Your daily fluctuations are larger than your entire original investment. You think that's easier to hold on to? What about the pullback that I had to endure here? I'm going to pull it up. You think that's going to be easy one to hold on to? You think I got scared out? I'm going to pull up SM Energy here, and I'm going to show you what I had to go through. And I'm going to describe to you why I'm so bullish on all of this. So if you look at some of this pattern here, we were at $27 and pulled all the way back down to 15. That's almost a 50% retracement there. Did I sell? Nope. We were all the way at $38 or something, $37, $38. We came all the way back to 26. Did I sell? Nope. How many of you, honestly, can hold through that? How many? I could give you 100 baggers on this channel, and I'm willing to bet the majority of you could not hold on. You're gonna go up 5 times your money and sell out, 10 times your money and sell out, 3 times your money, 1 time your money, and then you're gonna sell out. You got to be able to hold on, and what you have to do is you have to be deeply entrenched in the thesis of the channel. You have to know when to sell. You have to know how to value assets. So when looking at that comment, that comment, I don't like it because I'm going to tell you this. It is not easier to hold on. It is not easier no matter if you're up, if you're down, because if you're up massively, it is not easy to hold on. Now, for me, since I've been doing this for a while, I've been able to hold on. And I just know I've seen it before once, barely, and I've researched history on it. So I for some reason I just know that oil is going to go over $200 a barrel. It could go over 300. I don't know the exact timing, and we'll find it in the ratios. If oil goes higher, I think oil. If gold goes higher, I think oil will ultimately go higher at the end of the bull market, which will be 6 years away. This is a pricing based off of a dollar going down in value. It's based off of inflation. That's what's basically sparking this. It's not. There is supply demand, and if it is supply demand, where we would see this is in the ratio of the gold to oil ratio. And I'm going to pull that up here and look at it. And guys, most of these videos, I'm just kind of doing them off the top of my head. I do a one take, and that's all I do is I do a one take here. Let's look at the oil to gold, the gold to oil ratio. Of course, I blew right past the ratio of things. So here it is. Oops, gold to oil. And we're seeing this ratio drop here. And that's exactly what I said. You buy it up here. You could buy it all through this section in here in 2020 when it was coming down. I waited, and then I bought in September, October, I think, because I'm like, this is the time to go because the charts look so good. Now we've compressed this all the way down to 20, and if we break this down below this, we are in a massive bull market of oil. And I think we're going to break this to the downside and head on lower and compress all the way to below 10, probably to 8. And this was the last kind of market move that we had. It's very similar to that, and they usually break to the downside when they have these little wings, with these big wings like that. So I think we'll break down to the downside below 20, and it's going to be good. So I don't like reading things in comments where people think it's just easy to hang on. It's not. No matter how much money you have in there, it's not going to make it easier. What makes it easier is to know the value of how these things work, to know these ratios inside and out. Work with them with your hands. Look online and find these ratios. And if you guys need me to open up a website, I can do that. I'll work on it maybe this weekend. Maybe it's going to be a paid for membership thing, and the reason is it's going to be worth every single cent that whatever I charge. It's not going to be super expensive. It might be $5 or $10 a month. And that's it. And I will post all of this information on it. And what it's going to do is you need to be looking at the ratios, and I'll put a ratio update video coming up on all the ratios. But holding, it's a function of knowing this stuff. It's a function of researching the data and looking at history and knowing it. Everyone almost always wants to chase price. You got to knock that off. It's just the way it is. You have to be disciplined, and you have to look at things with value, and you have to buy things when they're down. Like right now, everyone does not, it seems like they don't like silver mining companies, and I don't own a lot of money in them, but they are down. And that is when you got to get excited. You got to get excited when everyone hates it. The more excited you get and the more put off you are, and I'm not saying to go buy a bunch of silver exploration companies or anything like that, but when silver's down, and that's when you got to buy. If you want really good returns, you have to buy it when it's down, period. Now, is silver is it at a great time to buy at this moment? It's really hard to say. No one's going to have that answer, and you're going to have to buy in that ambiguity because you're not going to have the answer. You're not going to know. The price is not going to give you justification of the purchase. You're going to have to look at the ratios, and the ratios, you're going to have to trust them. That's my only type of how I hold on. I look at the ratios and I say, we're good. It's good to go. Now, we may have a little bit more time in gold and silver, and I can look at that ratio, and we'll go. I'll do a ratio clip so you guys can see the ratios, and I'll make comments here. But none of this is going to get easier. How can I say this? It's not going to get easier if you're up versus down. Psychologically, it may be a little bit, but it's not going to get easier. It's going to get harder, in fact, because as your account blows up, if you're patient enough to allow and accept the gains, it's not going to be easier. It's going to be far harder. I mean, positions, some of your positions, if you can ride with me and if you follow some of my picks and you buy when I do, and we're patient, like for instance, Nova Royalty, I think that's going to be a $10 stock, $7 stock quite easily. And I think it could do it in a pretty big, third wave move, and then we're going to have more waves after it potentially. I think that some of these companies like SM Energy, it could be a $150 stock, $200 stock. It depends where oil goes, and it depends how far that ratio compresses. I can't tell you exactly how high it's going to go. I don't know. And CDEV and all these other ones, they're going to go a lot higher. And it's based off of inflation. It's based off the dollar and where the dollar goes and how interest rates react. If interest rates go up, it almost always is correlated with the oil price going up. It's almost like money just flows right into oil and oil assets. The money's not in oil. At the bottom, I think oil, there was only a few percent in oil. It's been the lowest amount of money that's been invested in oil, I think, in like all time. Oil is a premium fuel. We're still running this world on oil. We are in the S curve, the middle of the S curve of oil for the rest of the world, for third world countries. They're all adopting it. I don't know how we're going to use less oil. I think all of those projections are completely malarkey. They're all just garbage. Because if you're in the S curve and people are going to be getting richer and richer and richer, they're not going to go out straight and buy an electric vehicle. I'm sorry. I just don't think that's going to happen. I don't think we have the minerals on this earth to support electric vehicles for everyone on this earth. So I think we're going to be stuck with less mineral intensive things or mineral dense cars, let's say. Like it uses less minerals for a gasoline car. And I think we're going to burn as much oil as we possibly can in third world countries where they don't have advanced electrical grids, where they don't have all this stuff that you can just buy an electric vehicle straight off the bat. So I think that the projections for oil are vastly too low. And all of the growth of GDP is linked to oil. At least it has in the past. We are not in this new economy where we just all have solar panels on our roofs and where we have solar rolling out. Now, there's going to be higher adoptions of solar in the richer countries, but that's not the majority of people. That's the minority of people. That's the richest countries in the world. So focus on the world and don't focus necessarily on the United States only or some spots in Europe. And how is that going for the ones that have adopted the most renewables? How are those economies doing? And how are their natural gas prices? And how are their electricity prices? Are they low or are they high? Is it working or is it not working? I don't think it's working. I'm betting that money's going to come back into oil in a big way, and it's going to blow this stuff up to the upside. That's what I'm betting on. All you need is 1 or 2 good runs. That is it. You get a 50 to 100 bagger, and you get another 50 to 100 bagger. How much money is that? What's 1,000 bagger on $1,000? $1 million. $1 million from $1,000. I'm not saying that it's a very low likelihood to knock that out, and you can get 1,000 bagger in one shot, but you got to be buying at that bottom, baby. It's very rare and very hard to do that. But I think you can get a couple of 10 baggers or 50 baggers or 100 baggers even over your lifetime. You got to be buying early. You can't be chasing price. It does not happen, and it's not easy to hold. It is not easy to hold. You're up 25 times your money. You're at $250,000 on a $10,000 position. You think that's easy to hold? I don't think so. So I just don't like that. I don't agree with that comment. It does not get easier. Obviously, people think it does. I just don't think it does. I think it's actually harder. And you have to be more. You have to be a seasoned investor to see losses that are $50,000 to $100,000 on that position. Because if you have a 50% pullback, which we have, and which I've seen in SM Energy, it's not easy seeing, $500,000 go down to $250,000 on a $10,000, $15,000 position. You think that's easy? You got 10,000 shares in SM Energy. You buy it at $1.50, right? That's $11,000 or $15,000. You ride it up to 30 to $30 a share. That's $300,000. And then you see it go back to 16. You just lost $140,000 on your position. You think that's easy to ride through? I don't think so. And I think it just takes a matter of really knowing this stuff inside and out to ride through all this. And some of you guys might have larger positions than that. You might be riding up $200,000, $300,000, $400,000 swings, $1 million swings. That's what happens. So I just wanted to make a comment on that. I don't think it's easier. I think it's actually harder. And if you guys like this comment, if you have any comments, put it in the comment section below on what you guys think. Hit the thumbs up button if you like this content, and subscribe to the channel if you haven't already. Thanks for listening. This is Finding Value.